So I'm Marius Jurgilas. I'm representing the axis of evil here. I'm the central banker. So I'm not sure why you want me here, but since you invited, I'll just give my view, okay? And I should now be very serious. This is my personal view, which may or may not correspond to the view of the ECB, the Euro system, or the Lithuanian central bank, okay? So as I said, I'm the central banker, and my experience with Bitcoin is very short. I only started working on that since 2012. I'm sure you have been working longer than that. And the first time I got this question, like, what is Bitcoin, was in Norway, where the governor of the Norwegian central bank said, what is this thing? Should we get worried about that? How is that going to affect monetary policy, financial stability, our payment systems? And honestly, we didn't know the answer because we had no idea what it is, okay? So now we have a better understanding what it is, and I'm going to present, as I said, the central banker's perspective on what Bitcoins are, and a bit on blockchain, okay? But before I do that, since there are people from over the pond here, I need to explain what Bank of Lithuania is, okay? We are, I'm very proud of that, we are the mega regulators, okay? We are the FDIC, SEC, FTC in one. State controller, banking commission, everything, okay? And Rita will correct me if I'm wrong. We are the authority on everything as well in Lithuania. It's not like that in other countries, even in Europe, Eurozone countries, but we are the authority on payments, authority on macroprudential stuff and everything, okay? So we are very centralized, okay? But we also are part of a bigger network, which is the Euro system and European Central Bank. And I wanted to mention something in response to what has been said during the presentations here. This desire for instantaneous gratification, right? We want things now, we want payments to be fast. Everyone was talking about payments being slow and everything. How many of you have heard of SEPA? Okay, how many of you have heard of SCT Inst? One. Okay. In 9 days, there'll be a release of SEPA SCT Inst scheme, which is a scheme for instant payments in Europe. And rumors are that it will be within 5 seconds with the finality of payment from your account to recipient's account. Okay? Watch it. Okay? Just look out for it. But I'm here to present the central bank view. And yes, we are the axis of evil. And we have mixed views, yes. Just to make it easy for you, I'm going to put the points on the map, like where are these bad guys. And as Rita pointed out, there are risks, but some central banks got too extreme on that. And there are like 4 groups of central banks in the world with their views on Bitcoin. So in the first group, we have central banks from Russia, Bangladesh, Bolivia, Ecuador, who said, Bitcoin, forget it. It's illegal. You do stuff in it, you go to jail. Very explicit, very clear. I mean, Russia is very clear with that. Other central banks, they said, we prohibit regulated entities, payment institutions, credit institutions in dealing with Bitcoins. These are Japan, China, Thailand, India. If a regulated entity deals in Bitcoins, the CEO goes to jail. Not goes to jail, but he has to probably pay a fine. And then we go to a less regulated area, and that's US, Germany, the Fed, the Bundesbank, and most of the European countries. They said we need stricter rules. Okay, we're not kind of saying that you cannot deal in Bitcoins, but you have to obtain a license. Okay? If you want to run an exchange, if you want to deal in Bitcoins and you are a regulated entity, we want to license you. Okay? And the reasons are those 70 risks that Rita pointed out. And then we come to a fourth group of central banks, and that's where we are, the mega regulator, the axis of evil. We just said, look, EBA has some risks. We copy-pasted what was the right word? The recommendation? The recommendation, and that's it. Okay? Since we had a presentation on that before, I'm going to just skip through that quickly. Just here is a quick layout, right? So everything starts in 2012. ECB does some work, investigates, points out some risks. EBA issues a warning, we copy-paste it. Then EBA does some more work, they issue a recommendation, we copy-paste it. We're not that bad, right? But we have some issues with Bitcoin. We think, and that's a copy, and I subscribe to this statement. This is taken from ECB report on virtual currencies. There's major room for improvement. And this block here, I wanted to call it like a focus on consumer protection and conduct risk. Okay? There's something that makes us irritated and understand it correctly, then we something which is completely unregulated, unsupervised. Because, you know, that's our DNA, right? You know, we are the regulators, right? And there are reasons why we get uneasy when we see things like that. Because we have experience, okay? We saw, and we are still seeing what is happening when things which are unregulated, you know, get out of hand. I'm not suggesting that Bitcoin is, or it will be, or was such an object. But you know, there were 40 exchanges, 20 disappeared. Someone mentioned that some of the money was recouped. Some people lost their money. Okay? And we are the consumer protectors. So we worry. Okay? Rita mentioned anti-money laundering, terrorism financing. There was an allusion that there is no incentive, there's no economic incentive to do this or that. What was the economic incentive of that guy who blew off a bomb in Brussels? What kind of economic incentives did he have? So there are lunatics around us, and we need to be protecting against them, okay? So we are worrying about that. But we are not overreacting. I mean, we are happy to jump the gun, but you know, what we see is limited use. Only a few of transactions compared to the bulk of payments in the world. And there is this negative perception in the community, because Bitcoin has been associated with money laundering, anonymity, which attracts a certain type of people who, you know, they thrive in being anonymous because they don't want to be registered. And, you know, Panama Papers is an example of that. So enough on that. There's another block, which is technology. And people talked about that during this conversation already. From a central bank perspective, and correct me if I'm wrong, there are limits to technology. And I'm not going to repeat those statements that you know, everyone knows in this room, but I have just to state them. 4 transactions per second. That's light years away from the performance we want. If you want to have Bitcoin to become a major means of payment in the world. You said Bitcoin is reducing transaction time. How much time does it take to settle a Bitcoin transaction if you don't want to pay anything? 1 hour. That's a good example. I've heard better examples. Instant payments in seconds. You know such a Target 2 system, Euro 1, ACHs which are running payments in the world, they have a finality of payment, at least in Target 2, within seconds. Okay? The problem, okay, the main issue from a central bank perspective in payments is settlement risk. What is settlement risk? We had an unfortunate event a couple of years back that we had to close a bank. I wasn't at the central bank at that point in time, but there was a reason why they had to do it during the day. It was a complete mess. Why? I'm going to just make it up right now, 35 minutes, 22 seconds, the payments go through, and 1 second after that, the payments did not go through. It was very clear cutoff time. Okay? Finality of payment. It's a legal term. Bitcoin takes 10 minutes to process a block. It could take up to a week. I had a case where your payment doesn't go through. You know, it's not in the chain. So it introduces risks. Okay? And we as central bankers, we don't want that. Payments have something which is riskless. Okay? Risks are in consumer lending, dealing in securities, that's fine. You know, you understand what you're doing. But I don't want risk in payments. Okay? You said it's cheaper. How much does it take to process a Bitcoin transaction for a merchant? 1%? Less. Okay, fine. 0.1%. But the thing is, and some of you might not know that if you want it to be processed faster, you need to pay more. Well, that's equivalent to me as fees we already have for payment systems, right? That's fine. I mean, resources are involved, and they use resources, and you know they need to be repaid for. But how much resources? Quite a lot. There are some estimates, and I'm sure you know them. You know, an equivalent of all Ireland using electricity. Another I've heard was Denmark. But Denmark is very efficient, right? They have the wind farms, so maybe it's less. But it's a lot of electricity being used to run a network of payments which is just drop in the bucket compared to all the payments in the world. So if you want to scale it, we have an issue, okay? And that needs to be addressed. So there is some room for improvement. I'm not putting it down, I'm just saying things need to be worked out. We are in Lithuania here, right? So I'm from the Central Bank of Lithuania. There are some things happening in Lithuania, but not much. Okay, we have some exchanges, some wallets. There are some show-off cases of accepting bitcoins, a prepaid card, but not much happening in Lithuania. And absolutely nothing happening in the private, in the public sector. And I think that's where the future of blockchain development in Lithuania is. And the rest of my presentation, I want to focus on that. Okay? Blockchain, or distributed ledger technology. I think it's very promising. Okay? Right? As the word says, it's distributed. And distributed, for me, means resilience. And as I said, central bankers, they want resilience. They cannot stand the probability that the payment system will not be up tomorrow. That's not a possibility we are happy to live with. Distributed, resilient, great. Cost saving, fantastic. Okay? we are not happy to be in the middle, right? There are some markets where the central bank right now is in the middle. For example, the money market used to be bank-to-bank money market. Banks don't trust each other anymore. They don't lend money. Central bank is in the middle. We're not happy about that. We are happy if third parties, which stand in the middle of a block of the chain of transactions, security lending transaction, post-trade and everything, we are happy that they go out of business. So cost saving, fantastic. It introduces validation. So it's kind of some privacy control, access control. The data can be then shared and used. Great. And we talked about security. We love security. Actually, that's the reason why our friends in Estonia introduced blockchain in social services, and I'm going to talk about that in a second. But it's not yet disruptive. Why? There's no technological standard, right? And there is now a talk of maybe changing it, maybe rewriting the code, agreeing on it, how they agree on it, what's the governance structure, okay? And then we have this situation where we're trying to mix oil with water. You know, they don't mix it usually. And what is oil? It's good stuff, it's blockchain technology, but it doesn't fit the regulatory and legal framework that we are used to, okay? And that's where we need to be working on. How to convince me, Rita, the parliaments, and everything that, you know, we need to adapt legal frameworks, we need to adapt regulation to make sure that good stuff can work. Right now, I don't see how it can be mixed together. There's also a question of a business case. A couple days ago, there was a huge, much bigger than this conference in US on blockchain technology. And they had a survey asking people, what is the biggest obstacle of introducing blockchain? Like, whose fault is it? And I'll make it easy on you. It wasn't the central bank. The answer was business case. We don't see a business case, right? I mean, there's a potential. We can reduce costs. But when it comes down to giving me the bottom line, like, yes, it is cheaper, not really, okay? So business case and implementation difficulties, and that's legal and regulatory environment. I'm going to skip the costs. So how do central banks see the world? Okay? 2008, financial crisis hits the world. Why? Everyone had trust in financial institutions, commercial banks, the global banks, right? They dealt in those derivatives, credit default swaps, collateralized debt obligations and everything, where they have been taking this counterparty exposure against each other. I knew what my position is against you. I had no idea what your position is against him, and so on. And then one of us, boom, goes bust. That was Lehman Brothers. Everyone got scared shitless. Because I don't know what your position was against him, which means I don't know what my chances are to get my money back from you. Okay? And then central bankers around the world agreed, and everyone was nodding heads, we need to centralize. All derivatives, standardized derivatives, they need to be cleared and settled through central counterparties. Okay? We're talking about automatic clearinghouses, ACHs. Everyone is centralizing into one because that's efficiency. So centralization is good. We like it. Blockchain, Bitcoin, going the opposite direction, right? Just I'm trying to explain, how we feel. We said transparency, right? More transparency. We want disclosure. We want to understand what everyone is doing. Trade data repositories. Mandatory reporting of trades, right? It's like Big Brother watching over you because we want to be preemptive, okay? Blockchain, Bitcoin, is introducing anonymity. It's not exactly what we want, okay? We want trust. Trust is essential for us. That's why we have deposit insurance, right? That's why we have, when things went wobbly in Europe, Mr. Draghi went on stage and said, we will do whatever it takes, right? We stand behind the banks and we're going to lend liquidity to them as much as needed. What trust does the blockchain and Bitcoin industry bring? As I said, this connotation with illegal activity, right? And that's a problem. I'm not saying that that's what it is, but that's the perception. And perception is reality, okay? So we want trust and we want resilience, okay? We don't like complexity. We're going the route of making all the transactions simple, transparent. Why? Because whenever you have a product, financial product being sold to a consumer who doesn't really understand what it is, there's a possibility of taking an excessive margin, an excessive fee. And remember, we are protecting the consumer. So we don't like that. So complexity, not good. Opaqueness, not understanding exactly what it is, we don't like that. I had a quote from the New York Times where they were writing an article about Ethereum. And they said, even people who claim they know everything about Ethereum, they have difficulty explaining what it is. We have a problem with that. You have to work on that. It's your job to make it explicit so that everyone understands what it is, right? And we have different priorities. Our priority is consumer protection. Your priority is innovation. That's fine. We are not against innovation, but we have a different priority. So here is an advice from a benevolent central banker. Work on your business case, okay? Show the numbers, a viable project. Everyone was talking about a viable project. We haven't seen much. Be more transparent. Work on the verbal explanation of what these things are. Strive for simplicity. Don't make it overcomplicated. If you think some regulations are bad, okay, identify them and approach us. Work with us, and we're going to help you, okay? Don't alienate us and say, we don't need you. That's not going to work out, I think. And it's not only central banks, it's not only the financial regulators, involve other government agencies, right? Registries, and so on. And you need to show success track record. So blockchain to me is a philosophy, okay? And we have seen many developments. I'm going to skip through that. But here's a case from not far away from here, Estonia. How many of you know that in Estonia, for almost 10 years, they have introduced and successfully used blockchain technology? Just a few, okay? So in 2007, Estonian government databases had been breached by suspected friend from the East, and they said we cannot stand it anymore, we need to work on security. And they, together, the government together with a company which I will not tell you right now, they worked out so-called keyless signature infrastructure, which is based on blockchain, and it does everything what we have been talking about today, already for 10 years. Electronic identification, all health records are on blockchain. They keep contracts, wills, like things that stay for a long time. You can have a notary service electronically and some introduction of financial services. That's a good example. We need more of those. Lithuania. It's a very good case and is ripe for disruption. If the usual system is working fine, it's efficient, centralized system which is very efficient, then your business case will be very difficult. But if there is a country or systems which are inefficient, which don't share data, which have parallel data warehouses, that's a business case that you should be working on. And I think Lithuania has many good targets for innovation and introduction of blockchain technology. Okay? Everyone is talking about improving our fiscal numbers. Everyone is, right, willing to collect more VAT taxes. Imagine the world where you buy a coffee and VAT transaction is automatically registered, collected, and settled with a tax authority. No way of escaping it, right? They can track you. We don't like that, but they can track you. They can use big data analytics, right? If they see something happening for a period of time and then something stops, they send some investigation, right? So if you want to talk about more about this, I'm ready to talk about that after the talk. Financial sector, sorry, I'm going to skip that. Here's an open invitation just to say that we're not pointing the finger to the others. Bank of Lithuania, together with the European Central Bank, is working on a big project called Ana Credit. It's a big credit registry. It'll be shared across countries, across banks. It will be at a very granular level data on individual bank loans, legal entities, exposures, and so on. And right now, at this very moment, we are thinking of technical specification on this. Come and talk to us. Show us that you can use blockchain technology for that. We did the opposite. We went to the IT world, right? And we said, look, we're working on this. Can you help us? Oh, blockchain, maybe? Well, yeah, difficult. Not exactly the signal we would be willing to hear. But we are open. Okay? And I'm going to conclude with a philosophical note. Are virtual currencies money? Okay? How many of you have heard the name Narayana Kocherlakota? One. Okay? So there was a guy, Narayana Kocherlakota, in 1996, an economist, and he wrote an article, a very theoretical article, where he said, look, if we take a model economy, and in one model economy I have money. I solve it, I get allocation of assets, prices, and everything. Then I have another model economy where I introduce a concept of memory, infinite memory, where everyone knows everything about everything. These two worlds lead to identical allocations of assets, prices, and everything. And he concluded that money is memory. So if you have a world where I know everything about you, what transactions you did, whom did you trade with, how much did you save, we don't need money. I can use that memory as a means of payment. And that's what I think Bitcoin is. But you need to work on that. So who was that guy? Until last year, the president of the... Anyone? Of the Fed. The central banker. Okay? So for 20 years, we have a central banker running the Fed, and he has been working on that. Thank you.